When you first go to the ESS BIZTOOLS website, you will have the opportunity of seeing the home page. It's currently on the screen. We're going to go to products, and when we get to products, we're going to business advisory services. When we get to business advisory services, on the left-hand side of the screen, you've got Introduction to Business Advisory Services, which has been covered in another series of webinars. On the right-hand side, we have the 14 product modules that ESS BIZTOOLS has prepared already for assistance to accountants to deliver business advisory services. And today we're looking at selling a business. So when you go to the website, we have a executive summary, which is listing what's included in this particular paper, which is the paper which would guide an accountancy firm to give a series of advice to a client considering selling their business. And we're going to have a look at all this material in more detail in a moment. So we'll download it. We're going to download it in Word format. It does just take a couple of minutes, and once we've done that, we'll be able to work through the material. So what's happening in the business market at present? There's a need for clients to be properly prepared if they are going to be able to successfully sell their businesses. It's still a buyer's market in most sectors around Australia. The banks are tough to deal with. Banks are looking for business plans, reliable forecasts. The control of working capital is very important from the bank's point of view. So that's a bit of a prelude to what is happening in this whole market. So what we're looking at present is the contents of the material. And we're also then going to look at the forms that comprise the material that really is the work engine of the selling a business tools within ESS BIZTOOLS. So to just give you an idea of what the paper itself looks like, we start off with outcomes of a one-on-one meeting, and that's where each of the ESS BIZTOOLS Business Advisory Services product modules commences, because we're assuming that you've had a meeting with your clients, at which meeting you utilize the SME needs analysis to try to draw out the client into a conversation as to what is worrying them. So from that one-on-one meeting, we're assuming your client has identified that they'd like to look at selling their business. So we then have a summary of what we believe are the key issues to be considered in selling a business. It's quite difficult to sell businesses at present. There are literally thousands of businesses that will be sold in the next decade as baby boomers start to exit or plan to exit their businesses. But whether they are all going to receive the amount of money that they think their business is worth really does depend on the sort of professional advice that they can receive. And a significant contributor of that professional advice is going to be an accountancy business that is geared up to be offering business advisory services to their clients. Incidentally, if you have any questions, can you please type them, and in the webinar jargon, raise your hand and I will answer the questions towards the end of the webinar. So you can see there's linkages from the various material within this paper. It's going to the forms and in some cases other papers within ESS BIZTOOLS, so that you have a sound technical approach to undertaking a sale of business assignment. So as I said before, this material in this paper is giving you the background summary, which suggests that before any of your accountants start on an assignment utilizing this material, that they read this article so as to familiarize themselves with our approach and so that they've got a clear understanding of the material that's included within the system for them to use. We're just now going through the headings of a due diligence review into shares in a company. I don't particularly like advising anyone to buy shares in an operating company, but at times it's the only way the business can be sold, and in this case we're acting for the vendor, we're assuming, and therefore our suggestion is that if the vendor is selling shares in the company, that there's a trial run of a due diligence into the company undertaken first by you as their accountant, to make sure that if and when a due diligence review is undertaken by the purchaser's accountants, that they won't come across issues that should have been thought about first, especially if we're trying to maximize the valuation of the business. So we're covering a wide range of areas, as you can see, and we'll go through the individual forms in a moment. There's some suggested reading for a vendor to do, bearing in mind for many of your clients, they will only sell one or two businesses in their whole career. And it's not a bad idea that they read some material to properly prepare themselves. The other important thing is making sure that you're fairly upfront with the client as to the time factor in selling a business. Many businesses do require a 3 to 4 year planning plateau if the maximum value is going to be obtained. So we could then go into the forms themselves. So the first form that we are going to look at is the SME needs analysis. Now this is a very detailed document that enables you to have a conversation with the client about a whole range of issues affecting the client's business. The aim being for the client to have utilized this document to identify the areas of concern within their business. So we start off by looking at the current business operations, then at taxation planning, and then we start moving into future planning, things like business plans, budgets, business valuations, wealth creation. And what you are trying to achieve by utilizing this document is for the client to have identified that these are some areas that they've got some concerns with. So we've got risk management there on the screen at present, succession and estate planning, business improvement, and then we get into the business advisory services component areas, and then we got selling a business. So when the client's got to this, he said, yes, I think I should be having a discussion with you about giving me some assistance on selling the business. So that may well have been the the starting point for this review to have been undertaken. So we'll just flick through to the end of that, and then we'll go into just go back and go into the actual forms. So the Selling Business Consulting Control Form is the nerve center for this assignment. So we've got the paper or the article to give you some background information on the various components, and then it's a matter of using this control document to then undertake a review of what is happening. So this is a form which is getting ready for sale. When you've had the discussion with the client, what changes are necessary to improve the value? Why is the business for sale? Are the margins okay? Compare them to the benchmarks. Compare them to the tax office benchmarks. What's the unique selling proposition of this business? What's its differentiation? So from that you might be able to make a decision, is the business ready for sale? And if you answer no, what particular comments are you going to make about these various areas that are listed there? And then to help you do that, we have a document, getting ready for sale. So what changes are necessary? What do you believe the business is worth? When do you want to finalize the sale? So we have a due diligence checklist for a shares in a company. So if the vendor is a company and the only way that the sale can be affected is through selling shares in the company, what we're suggesting is that the purchasers' accountants may well be appointed to undertake a due diligence review of the company and all its records. So we're suggesting here that you utilize the due diligence checklist which we've prepared to undertake a trial run on a due diligence review, if you like, to try to ensure that all of the documents that might have to be produced for a due diligence review are able to be produced. So this document goes on for some pages because it considers a whole range of issues that were summarized a little earlier when we're going through looking at the paper itself. So what items need to be considered in planning the sale of a business? One of the big issues in many sales is what's going to happen to the key staff. And because of the competition in selling businesses at present, in trying to obtain the highest possible dollar, some businesses are offering retention bonuses to keep good staff remaining with the business for 12 months or so, as an inducement to try to ensure that the purchaser is going to be happy that they've still got a good nucleus of a team, maybe the people that really do have a significant amount of intellectual property on how this business operates. So who are the key people? Do you think they're likely to resign? They hear the business is for sale. Could they be encouraged to remain with the business if there was an incentive payment to them to do so? What about the valuation? What does the owner think the business is worth? What do you believe it's worth? What's the valuation gap? What changes do you think should be made to the business? What could be done over the next couple of years to try to bridge the valuation gap? Is there any surplus assets in this business? Could they be disposed of? What's going on with the intellectual property? Is it all properly assigned to the vendor? So there's a whole range of questions there. We've looked at what could be done to improve the multiplier. This is where you can really add value to this process. And we've got an example there that if you were valuing a private company, you normally take about 1/3 of the value, the average price earnings ratio for an equivalent public company on the stock exchange. Now, traditionally the average on the stock exchange is around 15. So that would mean that for a private company, you'd be valuing a business at about 5 times the after-tax profit. But if you were doing an initial public offer, you'd be trying to get around 9, 10, 11 times the after-tax profit. So what improvements and changes needs to be made to the business so that an arm's length, independent but not anxious purchaser might be able to pay, say, 7, 8, 9 times after-tax profit because the systems are in place. The business looks like it would be good enough to do an IPO. So we've got some questions there for you to consider, because this may well be the very important task that you agreed to the client to undertake over the next 2 years to help them get this business into an investment-ready status. So what are the impediments to the valuation? Here's a worksheet for you to list them: gross profit, declining turnover, wages, some of these key figures that might be out when you compare it to benchmarks. Perhaps the strategy in the next couple of years has got to be to get these key expense ratios, which are easily compared to benchmarks, in line. Is the stock turn satisfactory? If debtor days outstanding, if the debtor's days outstanding are sitting on 60 days, a lot of purchasers would get very concerned, because the assumption they'd be making is that the current customers would want to continue that very long drawn-out payment process. Whereas the purchaser might be assuming their working capital requirements will only be to fund for 30 days of debtors. This can be a huge turn-off. So what can be done if you're going to give yourself a couple of years to try to rectify the situation? So the business got some obsolete technology? Have they got some unused fixed assets? Perhaps some of these things could get sold to try to improve the overall valuation of the business. Because if you can improve the after-tax profitability, you are going to achieve a multiplier of 5, 6, 7, 8 times in the valuation of the business. So we have a form then to help you to identify the valuation gaps that might be obvious within this business, and then you can identify your strategy to fix those gaps. There is a paper on strategies to bridge the valuation gap, which you could go to and look at, and that will give you some further indication. We have a due diligence review checklist, which is for sale of other than shares in a company. What are the sort of things that a purchasing entity through their accountant would want to check in the business? Now, you know that very well, because put your hat on acting for a purchaser. What would you want to look at? I think we've listed them all here. How do the systems work? Are the records correct? Is the future maintainable profit able to be supported? So that worksheet hopefully will help you in undertaking those tasks. We have a document here, planning the sale. When's the best time to sell? We all know that business valuations and sale of businesses can be maximized at various cycles. The selling cycle is not at its peak at present. It's very much in the doldrums, although some businesses are selling. From my research, professional services, accounting firms, medical-related businesses, financial planning, property recruitment type businesses, IT and software are all selling. Some import and export businesses are selling, particularly to overseas buyers. But it's not boom times, but when are the boom times going to be around? Perhaps that's what you should be encouraging your client to target. If you're going to prepare a selling memorandum to produce a document to help sell the client's business, what would you include in it? So we have a checklist there to help you select the key items and the charts and the graphs and tables that you might care to include in such a document, so that you're then able to prepare a template for the document, and they're the key headings that we've included in there. And there may be some others for some particular businesses. You can add those. We have there's taxation issues, which I'm probably not going to dwell on, but talking about the capital gains tax treatment on the sale of a business. Many people ring me and ask for confidentiality agreements, so we have a confidentiality agreement in there, which obviously should be sent to the proposed purchaser fairly early in the negotiation process. What does the vendor need from the buyer? It's not just what the buyer needs. I think it's very important, as more and more sales are going through on vendor finance, the vendor needs to understand something about the buyer. Is he going to have the ability to meet commitments? Is there empathy? Are they paying a good deposit? Have they signed the confidentiality agreement? You may have to go in and ask questions about their net worth and look at how much money they're also borrowing from other people and how much they're wanting left in as vendor finance to determine whether they're going to have the ability to repay your client if they've got to offer vendor finance. And what are some of the issues that might be necessary to finalize the sales contract? Obviously the negotiation on price, deposit, the apportionment. How's the purchaser going to pay? What are the causes for staff, warranties, vendor assistance? All these type of things need to be considered as part of the sale process. And we've listed some important issues from the vendor: closing accounts with suppliers, and in particular cancelling guarantees. I'm sure we've all heard stories and know situations where someone has sold out of a business and 4 or 5 years later someone comes and produces their guarantee and demands payment because something's gone wrong in the business and they omitted to retrieve their guarantee when they sold out of the business. What's going on with the lease? Is the lease being appropriately assigned, or is your client going to be annoyed to receive correspondence from the lessor's solicitors demanding that your client reinstate the premises to their original condition at the end of the lease because something went wrong with the purchaser and your client was not appropriately released by the lessor? Same thing goes for banks. Some of the other payments, cancelling payroll tax and workers' comp, just making sure you don't receive follow-up material. We've included some suggested papers that the business owner might like to read before going through the process of selling their business. The other items I just want to then refer to are the quotation timetable that's in the document. We've included a form to assist accountants to prepare quotations. So within each of the business advisory services modules, there's 14 of them, there is a separate type of form to assist in preparing a quotation. My recommendation is you don't undertake any of this work, which we're calling business advisory services, unless you have prepared a written quotation and submitted that to your client. And what we have in this sort of form is a listing of some of the work that you might undertake, and it's all linked back to the commentary within the paper, so that you have a very good idea of what that work entails. And hopefully a checklist like this will assist you in the preparation of the overall cost estimate for the work to be done. So at the end of this, you can then enter your charge out rates and calculate the fee, put any super profit in you're putting in, and determine a payment schedule. We also believe it's very important that you specify the payment schedule to clients so that they understand that this is a different way of doing business, unless you already have them well educated on progressive payments, annual contracts. We also have developed a proposal for selling a business consultancy form, which is included. You can prepare your own, of course. We've had people ask us for such a document, so we've included that. And obviously there's a different one for each of the 14 business advisory services modules. This one's for selling a business, how you might go about it. Obviously you can edit this. You need to make sure that if you're adopting this sort of template that you are going to undertake everything that's mentioned therein. So this is where you would confirm the quotation and the payment terms, and also cover yourself for any additional work that might come along, so that the client doesn't believe this is all part of that original assignment. So that's our overview of selling a business. I'll just go back to see if there's any questions. I can't see any questions, but if you think of some questions later on that you'd like to ask us about sale of a business, or indeed any part of the ESS BIZTOOLS program, please do not hesitate to contact us.